There are many different ETFs that you can trade in the stock market. For example, there's sector ETFs such as the airline stocks or the oil companies, and there's ETFs that are based around that. And then there's also ETFs that are based on size, such as large cap, mid cap, small cap stocks, and you can trade ETFs on that. And there's hundreds of other ETFs out there. Now, one group of ETFs that I want to warn you about is the currency ETFs. And currency ETFs have some major issues and pitfalls. Here's the thing, when you're looking at a stock, normally you want that stock to continue heading higher. You want that stock's company earnings to grow. You want their customer acquisitions to grow. You want their revenue to grow. In general, that stock is always, you're hoping for it to continue to grow because it just naturally evolves the company and it just grows the revenue and everything just creates growth and things get better. However, with currency ETFs, if you have a currency ETF, in general, it relates to a currency, a country's currency. Now, if we take this idea in mind about currency and apply it to the US dollar, so here's a $20 bill, and we take a look at what is it that we can purchase with this $20. Now, for simplicity's sake, I'm going to say that this $20 will get me lunch at a general restaurant. So at the moment in time, this $20 can buy me lunch. Now, if the currency starts rising and starts skyrocketing to the moon, all of a sudden, this $20 is going to buy me much more lunch. It's going to be able to buy me 20 times that if all of a sudden the currency rises and now I can buy lunch for just $1. So for example, now this $20 gets replaced with this $1. So now imagine if you went out to get lunch and all you're doing is you're paying $1 for that lunch because the currency rose. Now you may think that, hey, from a consumer standpoint, this is fantastic, or this is great news because now I can buy more stuff. But in terms of relationships and value, this really takes the valuations of stocks to a whole different level. It actually makes them dollar-wise seem a lot less. Because now if a company was worth $1 million and now the dollar value increased, it would be worth a lot less, right? So think about it. Lunch was $20. Now lunch is $1. So a company was $20 million. Now the company is $1 million. So you can see how this plays into effect with the currency, that these currencies normally you don't want them to fluctuate so much. You don't want them to rise or sink to a huge level. So now the end result that can happen is if a currency skyrockets to the moon or it tanks and sinks to the bottom, you have different things that can happen. There's a lot of scenarios and situations, and you might get things like hyperinflation or hyperdeflation and a lot of other messes. So in general, you don't want a currency to go all the way up to the moon. Yet, however, we have investment vehicles to purchase, to trade, to invest our money into a certain specific currency, which makes it really interesting because if a currency explodes to the upside, it can really cause a lot of trouble. Now, for a stock, it's completely different. If a stock explodes to the upside, this is growth within a company, and this is something we want. But with a currency, if the dollar skyrockets to the moon, it really can cause a lot of damage. Now, we do have these instruments available where you can trade currency ETFs. But as I've just explained, you can see where the issue or the problem can start to occur. If that currency starts skyrocketing, or if you're shorting an ETF on the currency and it starts tanking or diving, there's some issues that you'll get from this situation and scenario. So if you're looking to trade, to invest, look for a type of investment that's actually made for growth, because there's going to be a lot of different types of investments, just like currency ETFs, but that aren't really there, that are made for growth. So remember, when looking at a currency ETF, that it's not really set up and made for growth like a stock. A stock, it's set up and made for growth. You want higher revenue. But with a currency, you don't want it to continue all the way to infinity. And in fact, there's going to be the Federal Reserve or the people that control the monetary policy are going to watch out for this, that things don't skyrocket too fast, too quick. So if you're trying to trade a currency, you're kind of doing yourself a disservice because the goal of the currency isn't always to grow and get bigger and bigger. However, it is of course interesting that we do have currency ETFs now, and you can trade those based on risk management and profiling your risk. But most investors in general, regular mom and pop retail investors, should probably avoid trading currencies, because remember, the essence is that these currency ETFs are not there and not set up for growth. Whereas with stocks, of course, you want them to grow and get bigger and get better. So thank you for joining me in this video. And if you want to see more training videos like this one, click one of the thumbnails right below this video and you can continue learning. And if you'd like to see some of the stocks that I'm watching in the current market conditions, then just go ahead, click this link right here. And when you get there, enter your name and email address, and I'll be sure to send you my newsletter or rapid recaps whenever they are released. And if you'd like to condense your trading education, speed it up, and just get everything from one spot, then take a look at some of the courses that I have available at TRADERSFLY.com. Thanks for joining me, and remember to do what you love, contribute to others, but most importantly, live life abundantly. I'll see you next time.